So the current tax cuts are set to expire at the end of 2025. So in today's video, what I want to unpack with you is to help explain what happens if the tax cuts do expire at the end of 2025, what we believe is actually going to happen prior to the end of 2025, and then also what are some strategies that you can deploy today to make sure that you are taking advantage of the current tax cuts no matter what happens at the end of 2025. So as it stands, the current tax rates for individuals here in the United States and in Tennessee more specifically, the tax rates go 10%, 12%, 22, 24, and 32%. They go up a little bit from there as well, but that'll hit the main incomes. If these tax cuts do expire, then our income, if you're in the 10% bracket, stays the same. If you get above the 10% bracket, which almost every person here in Middle Tennessee would be that's watching this video, the 12% bracket goes to 15, the 22 goes to 25, the 24 goes to 28, 32 goes to 33, and onward. So essentially, the same amount of income that you're earning today is going to be taxed at a higher rate. Now, the old tax brackets as well were more compressed than they are today, which means smaller income amounts inside each one of these brackets. So it's likely that you'll get hit on two ends of it, lower income brackets and higher tax brackets as well. So if nothing happens at all and things do expire, taxes are going to go up for every single person in the state of Tennessee that has taxable income outside of that 10% bracket, which again is going to hit almost every single person watching this video. The other thing that's going to happen is they are going to lower the standard deduction. Right now, the standard deduction for Americans has been doubled to where for most families out there, you're going to be in a $23,000 standard deduction limit. If you're over the age of 65, then it could be upwards of $32,000 of standard deduction that you're able to claim, which immediately reduces that taxable income. The standard deduction reduces that amount of money immediately off the tax return, essentially putting that in a 0% tax bracket. Well, if they do go back down, then we are going to lose a lot of the deduction amount that we're taking on an annual basis, meaning again, taxes are going to go up across the board for your income. Now, what do we think is going to happen to these tax cuts as we get close to the end of 2025? Well, as we sit here today, we have the potential, the election coming up in November, and a lot of folks believe that one way or the other, if Republicans win, one thing will happen. If Democrats win, then another thing may happen. Taking politics off the table, here's what we believe in either scenario will happen. If Republicans do win the presidency in November, we believe the current Trump tax cuts will get extended out as they are. There may be additional changes, but I don't believe any of those are going to go away. We're not going to see taxes go up immediately on really any American if the Republicans do win the presidency. If Democrats do win, I don't believe they're going to allow these tax cuts to just fully expire either. The research that we've done is going to show that if you're under $400,000 of married filing jointly, $400,000 of income or below, which is essentially that 24% tax bracket or below, that there will not be any changes to those tax rates, income brackets in a negative way, that they're going to continue to allow those to maintain as they are. If you make over $400,000 or more, then we do believe that taxes have the potential to go up on those individual families, and capital gains could also be impacted in that scenario. But the current capital gains tax increase is really, again, only targeting those high income individuals. That's today. We don't see the standard deduction limit getting reduced back down to what it was. Essentially, the Tax Cuts and Jobs Act was designed to simplify the tax code. Well, how did they simplify the tax code? Well, number one, they eliminated the ability for the majority of Americans to itemize on their tax return. This higher standard deduction that we take, unless you have itemized deductions above that number, you don't get to itemize anymore. Most Americans have lost the ability to itemize. Therefore, you're only claiming the standard deduction. If you are only claiming the standard deduction, it's nearly impossible to cheat the tax code, because where did people cheat on their taxes? It's by fudging those itemized deductions or creating some itemized deductions that didn't exist. When you take the standard deduction, you're not able to do that anymore. The number is what it is. And all of your W-2s and 1099 documents, the IRS actually gets a copy of those, and so they know what you should be filing from a tax form perspective. So again, it's that itemized deductions that essentially is where people are able to cheat on their tax returns. So while we do see some potential changes coming down the pike, that's our estimation as to what those changes could immediately look like, really coming out of the gate in that first year of 2025. What changes are going to be on the table for the President, the House, and Senate to be able to really adjust? Are they going to keep things as they are, or are there going to be some adjustments? We believe almost everything will stay the same right out of the gate. Potentially those earning over $400,000 or more could be in a slightly higher tax environment. Now, that's just kind of short term. Let's take a step back and just look 5 to 10 years out. If you believe that taxes are going to go down in the next 5 to 10 years, this next segment piece is not for you. If you believe taxes are going to just stay the same, hopefully they don't get any worse, but at least just stay the same, then this next segment 100% is for you. If you believe taxes are likely to go up in this country over the next 5 to 10 years because of the deficit that we have here in our country, the debt that we carry alone, then this next piece is for you as well. So we believe that hopefully taxes stay the same, or that it's likely that they're going to go up over the next 5 to 10 years on all Americans. No matter how they start this out of the gate, that it's going to hit every single one of us. So if that is true, if you believe that taxes are going to stay the same or go up, and you have money and investments that are in pre-tax accounts, meaning there are monies you put into an old 401k, an old retirement plan, an old individual retirement account, money that you have out there that is pre-taxed, that is going to be taxed in the future when you spend those dollars. Number one, if you believe that those accounts are going to grow, or taxes are going to go up, or both, should you begin considering starting to prepay those taxes today through a Roth conversion strategy or other similar strategies to be able to minimize the total tax you pay on those dollars? Essentially, what I want to do for my family as we earn money and we invest money, I want to pay the least amount of taxes on my money now, in the middle, and in the end of my life, right? How do I pay the least amount of taxes legally, morally, ethically on all of the money that we've earned in our family? And there are great strategies out there to help show you what the impact of tax planning can have on your retirement. One of the softwares that we use in our office specifically related to tax planning can take your current scenario just as you're operating today, and if we carry that scenario out from now all the way out till age 90 or 100, you can pick the year of which you think how long you're going to live, but from now until the end of our life, factoring in required minimum distributions, taxation on our investments and income, I can show you what you're targeted and estimated to spend in tax from today till the day that you die. Then we can run some scenarios to go, well, what if we incorporated tax planning into this scenario? Didn't change the investments, didn't change the rate of return, didn't change the amount of income you spend, kept everything the same, but only looked at utilizing tax planning strategies to try to minimize and mitigate the total amount of tax outlay over your lifetime. And in almost every single one of those scenarios that we run, these side-by-sides, the tax savings for most folks over a lifetime is well over six figures, well over $100,000 in tax savings just by incorporating tax planning. So there are great opportunities out there today. What should you do? Well, again, if you think that taxes are going to stay the same or potentially go up, you need to consider tax planning strategies today while the rates are what they are, and utilize a financial planning firm that really puts an emphasis towards tax planning. Here at our company, we can offer a tax reduction analysis, as I mentioned. If that's something that's interesting to you, just click the link below and we'll have somebody reach out.